I talked about a little bit of looking at the agricultural sector, the industry going forward and backward as well. And boy, long term, ag looks good. We've got a cheap dollar, we've got growth in Asia, we've got global economic growth, and that means more demand for food. And we're going to see, I think, a very healthy farm economy going forward. 2012 is likely to be a little less positive than 2011 because of a bit stronger dollar and some of the global economic pullbacks that we're seeing in some of our trading partners. I think the chief one is what's going on in Europe right now. As the European nations potentially default on sovereign debt, what that does is individuals, investors flee Europe, sell their bonds, get their euros and exchange them for dollars, use their dollars to buy U.S. debt. What that does is drive up the value of the dollar and pushes agricultural commodity prices down. That's the number one issue, in my judgment, facing agriculture for 2012. The second issue, in my judgment, is pullback in Asia. Some of the growth numbers that we did expect, we're seeing those come off. Now, on the flip side, we've got South Korea market is opening up, at least in terms of trade, and that's going to look better. But overall, again, Europe, and also, of course, it's not just the default on the sovereign debt. When you go through economic downturns, as Europe's in a recession right now, their demand for food comes down. So that transmits back again to lower farm income, lower farm commodity prices, and the other negatives that come out of that. You know, one of the best things about speaking to agricultural groups and individuals is they're so much more knowledgeable on the economics of what's going on. If you're in farming and agriculture, you're supply and demand. If you're not familiar with supply and demand and you're in ag, then you probably need to find you a different industry. So as a person who deals in supply and demand, economics, if you can't say supply and demand, you probably shouldn't be an economist. As well. So we deal in it. So it's exciting. I mean, there's not a place on the face of the globe right now that's better to be, in my judgment, than in this part of the country. And that's what we call the Midamerica region, which of course includes North Dakota, South Dakota, Minnesota, Iowa, Nebraska, Kansas, Oklahoma, Arkansas, Colorado, Wyoming. That's where we're seeing so much action right now. And a lot of it, of course, is tied to energy commodity prices and to agricultural commodity prices and good, strong ag income. And as I said, we're going to see some ups and downs, no doubt. But are we going to return to the bad old days of ag? And you're going to see a strong trajectory in terms of ag income and evidence of this conference. We've got conferences across the U.S. and particularly in this part of the country addressing farm income issues, addressing the actual production issues, of course. Of course, we're seeing on top of that, land prices and cash rents running at rates, the increases that can't be sustained. We're going to see some less growth in agricultural land prices and cash rent prices. Those are going to come, the growth is going to come down. Not right and I'm not on the negative side, I'm just on the less positive side.
All right, sounds good. Well, that should take care of it. Thank
Good,
you very much for your time. We
Good
appreciate it.
to talk to you. See you.